Good afternoon, ladies and gentlemen, and thank you for your presence today. My name is Sean Ramsden. I've got the pleasure of sitting on the board as a non-exec director of the British Chambers of Commerce and the Chamber of Customs. And on behalf of those organisations, I want to welcome you today to the first of a series of webinars that will count down to the end of the transition period on the 31st of December. And today marks 100 days to go before that historic day when the UK will become a sovereign nation. Our borders will be under UK government control and will no longer be part of the European single market. The will of the people means that businesses will need to prepare for the impacts and changes that come as a result of that. The false dawns of previous no-deal outcomes, followed by the withdrawal agreement and the transition period, has resulted in many businesses reporting that there's still a lot to do to be ready for the change. And today's session will aim to point our guests in the direction of the practical actions that traders should consider against the backdrop of continued uncertainty regarding the outcome of UK and EU trade negotiations. Now we're going to kick off with a quick snap poll, ladies and gentlemen, on just to gauge the sense out there. And the question for the poll is, how prepared is your business to continue trading at the end of that transition period? You perhaps all know the routine now. Please select one of the choices that you see before you, and let's see what we get to. So that's some interesting results coming in. 9% of you are very prepared, 63% of you are somewhat prepared, 15% of you not very prepared, only 2% of you not prepared at all. That's interesting. I think that seems to be quite an optimistic outlook. SMEs, my understanding is that SMEs seem to be between 20 and 40% prepared. Larger companies closer to 70%, so we've obviously got some well-prepared companies on board here. I'd like to introduce Liam. Liam Smyth is BCC's Director of Trade Facilitation. He's kept very busy engaging across government on our future trade policy and on the impacts of Brexit. He represents the Chamber network on a number of government working groups, is a member of HMRC's Joint Customs Consultative Committee, and is on the International Chambers of Commerce Technical Commission on Origin. More recently, he's led the development of the new Customs Declaration Service that will be delivered through our own Chamber network, the Chamber Customs. So if I may, I will pass on to Liam.
Thank you, Sean, and welcome to everyone who's joined us today. I appreciate you taking your time out and taking the time to listen to what we have to say. Hopefully, therefore, I'm going to make that time useful for you, and hopefully you'll learn something that perhaps helps you to move your preparedness up the scale if you haven't started yet, or indeed helps with the continuing preparations that you are making where you're somewhat prepared. So today's presentation, I should first of all say, you will get copies of these slides made available to you from the Chambers of Commerce that you have joined us from. Also, there is a recording being made of the session, as troubling as that might be to watch over again. It will be there if you choose to do that and to use that. So I'm going to talk on a number of points. The first thing I'm going to do is really talk to the environment that we're in right now, the backdrop, if you like, to current state of UK trade as we head towards the end of the transition period in 100 days' time. I'm going to talk a little to the trade agreements that have already been entered into by our government and those still to come, and maybe I'm going to have a stab at taking a measure on whether we'll have those in place by the end of this year, some of those in any case. I'm going to talk to the border arrangements that the government has set out fairly recently in terms of the way that our borders will be under our sovereign control. I'm going to touch on Northern Ireland, but I'm not going to focus hugely on it, but I'm going to talk to it because there's some important changes in the way that Northern Ireland will operate after the end of the transition period. And then we're going to move on to the practical steps that I'm suggesting that you take, if you haven't already, between now and 100 days from now, and also some of the actions that you should consider engaging in before the end of this year. In fact, in the case of some of them, as soon as it is possible to do so. So I shall share my screen. Hopefully you're going to see the right thing and be seeing a slide with 100 days to go on the screen there. And Sean's going to give me a thumbs up if that's what's happened. Yeah, that's what's happened. That's good. Moving on then, what is the backdrop? What's the environment that we're in right now? Well, just to remind you, if you didn't already know, EU membership ended on the 31st of January this year, so we're no longer part of the European Union and the single market, but we were afforded and negotiated a transition period where we remain as if we're in the single market until the end of the year on the 31st of December. EU trade negotiations clearly continue, and although the latest round of talks were not particularly fruitful, it would seem both sides would have said that was the case, I think, complicated by the publication of the Internal Market Bill and the EU response to that and all of the stuff around that. They do continue, and the next round of talks are planned, including a visit to the EU Council that's been announced, I think, for the 28th of October. We've only got 100 days until transition ends, and that's not a lot of time for traders to prepare. And the fact is, there's evidence in this snap poll we've done with this motivated group of people who've bothered to turn up for this event, traders still remain unprepared. You know, deal or no deal is the question. You know, who can you trust? Who's to blame? And the whole Northern Ireland piece. And really, this is my way of really pointing towards the stage we're at in trade negotiations with the EU, having made a historic vote in favour of leaving the EU, means that there will be mistrust on both sides. We almost need to expect it. We have to expect that there will be lots of rhetoric. Politics will play a huge part, but fundamentally, at the end of the day, pragmatism must play a role too. And so as we head towards the finality of the trade negotiations, our government says that there has to be a deal, or the likelihood of a deal by the end of October. And they would say that the UK Internal Market Bill is purely pragmatism. It's necessary for our legislature to have processed that bill, agreed on the Internal Market Bill in case we are in circumstances where we don't reach a deal with the European Union on trade. And of course, that is pragmatism at play. It's seen by the other side as untrustworthy, and there's a whole load of rhetoric has been around that over the last couple of weeks. But it really matters hugely for Northern Ireland that there is a backstop, if you like, to the backstop, that the Internal Market Bill is in place should it need to be used in the event of no deal. But I really think my view of it would be that whilst it's necessary and pragmatic for our government to have that bill through Parliament, go through Parliament and become available to them, the resolve to do a deal with the European Union remains. And I would evidence the detailed work that's going on behind the scenes with our trade negotiators, who are negotiating on a range of matters, not only with the European Union, but also with the Australians, with the New Zealand, with the Kiwis in New Zealand, and with the US on matters such as, you know, data transfer, rules of origin, and a whole range of other chapters that typically inhabit a free trade agreement. So the work continues at the Department of International Trade or with the EU task force and others. And so I would say, let's see our glass half full. I would encourage you to ignore the rhetoric. try and ignore the politics and focus on the potential for pragmatism to prevail and for a deal to be done. So I would say at the moment, whilst it looks like no deal, focus on the idea it might be a deal. The background environment, though, keeps changing. There's lots going on to facilitate the end of this transition period. We've got a new UK border operating model announced on the 12th of July. And actually, the UK border operating model in first read answered a lot of questions. But then actually, the more you read it and the more you went into the, I think, 192 pages of it, the more questions that have arisen. So it is a model, but it is an incomplete model because it relies hugely on the outcome of the EU trade negotiations. And so if we don't have a good outcome to EU trade negotiations, there will be change to the way that operating model will have to be operated. A new version of it, in fact, an updated version, is expected later in October, where some of the items in it are being tweaked. Some of the policy positions are having to be tweaked because actually a few of them were not workable in the way that they described. But there's also going to be new rules on the border between Great Britain and Northern Ireland, and I'll say a bit more about that in the next slide. And we've also got the deployment of the CDS, Customs Declaration System, developed by HMRC, that ought to have been deployed already, actually, had it not been for Brexit. And that system replaces the chief system that is not Union Customs Code compliant with a CDS system, which is Union Customs Code compliant. And therefore, the reason why the CDS system has been deployed on the GBNI border first is because the system on that border must be compliant with the Union Customs Code, because of course Northern Ireland will still be subject to the Union Customs Code after the 31st of December. We also have some other new systems coming into play, something called the Goods Vehicle Movement System, a service actually, Goods Vehicle Movement Service, and a smart freight system that will basically track the goods contained within a truck's container, whether they're from one business or multiple businesses. This is a way of bringing together multiple customs declarations under one umbrella number, and instructing the driver of the vehicle as to whether they have permission to proceed to the port or not, whether they have permission to load onto a carrier, a ship, or not, and whilst the goods are in transit, will determine whether, with some risk profiling, the truck has to move to an inward inspection point where, for example, phytosanitary checks or inspections can take place. At those new border inspection posts, which will be the construction of which is not yet started but will very soon. Sites are being identified, and those border inspection posts will be in operation in NI from 1st of January and in the rest of the UK from April onwards for certain checks. Turning to GBNI, NI to GB, just to highlight some of the differences in the goods moving from GB to NI. Great Britain will be in a UK customs territory with UK customs rules. So we will follow the border operating model, if you like, our United Kingdom customs code. But whilst Northern Ireland will be in the UK customs territory, it will apply EU rules on customs, on regulations, on SPS, sanitary and phytosanitary regulations, on VAT, on state aid, and a number of other matters that will mean that Northern Ireland will be compliant with the Union Customs Code for a period of time beyond us leaving the European Union. And so what that means is that goods moving from GB will be treated as if they are an import into Northern Ireland, and customs duties will need to be paid. Now, if duties are paid on those goods into Northern Ireland, and the company that receives them, that imports them, can prove that the goods were consumed in Northern Ireland, maybe even consumed as in processed into finished goods and then re-exported back to the UK, or consumed because people ate the food or whatever, then the duty can be reclaimed. But there will be the requirement for controls on the border between GB and Northern Ireland, different to the controls between the European Union and United Kingdom. So if you move goods into NI or bring goods from NI, there are some new rules that will apply there. And the system, just there is a graphic in the package that you can take in detail. But basically, as I've already described, the goods movement reference for each vehicle will be an umbrella for all of the individual unique reference details for all the customs declarations made for the goods contained within a trailer unit. And they will require import declarations, safety and security declarations. And if the goods are being moved under the Common Transit Convention, so let's say they have come from the EU via the GB land bridge to Northern Ireland, then they of course would have the single accompanying document, the transit document, with them being declared as the reference for the goods movement reference that the truck driver and trucking haulier company will require. It's only once that's validated that a carrier at the location will accept those goods onto a ferry, and it's only at that point that the carrier is responsible for capturing the vehicle registration number, the trailer registration number, and they have a responsibility to make sure that all of those things are in order before taking those goods either on the Eurostar or via a ferry. And during the transport across the sea or under the channel, the government will do that risk checking and risk analysis to decide whether they want to look further at the goods or not. For goods moving from NI to the rest of the UK, the haulier or intermediary will have to do the same thing with the GVMS system, and there has to be an export declaration with the safety and security declaration information, or indeed the use of transit. And the same thing would apply in terms of the government receiving notification and making a decision as to what they would do with those goods. Now that obviously applies, it doesn't apply to all goods, but it will apply by exception to a limited range of goods, yet to be determined in some respects. So that's the kind of customs background, and just focusing on some of the sort of significant differences that are taking place. And it's fair to say that in the case of GVMS, that system has yet to be delivered. The hauliers have yet to see it. The drivers have yet to be trained on it. And we don't have a lot of time left. So the government assures us that the systems will be ready in order that it can be deployed in Northern Ireland on the 1st of January. I should also mention the Trader Support Service in Northern Ireland has been a procurement let out by HMRC, valued at around £200 million over 2 years, where these customs declarations will be free at the point of need for traders going in both directions. And if you have not yet registered on the Trader Support Service through gov.uk, if you move goods between Northern Ireland and GB, then you ought to register for that service so that you are first in the queue to be supported with what you need to do. I'll turn now to trade agreements. Just a bit of a hop, a skip and a jump through what's happened so far. So you will have heard, I'm sure, in the news over the last couple of years talk of rollover trade agreements. The idea that the trade agreements that the EU has in place with the rest of the world would be rolled over to be bilateral agreements between the UK and those countries, or indeed between the UK and trade blocs in some cases. And I think famously Liam Fox talked about, when he was Trade Minister, about the how many would be done and they would be easy to do. Well, actually, the latest information is that the continuity agreements, so-called continuity agreements. They're no longer rollover agreements, they're continuity agreements. And we have agreements signed with 47 countries, representing about 74% of trade, not including trade with the EU, but trade done by the UK with those continuity agreements. And that's a value of about 125 billion pounds. It leaves around 40 billion pounds of trade still to be signed off and agreed. That's about 26% of those continuity or rollover agreements with 21 countries. And that's a significant amount of money still to be done, trade still to be done. Important to recognise, though, that in respect of the EU 27 countries, they represent 300 billion pounds of exports from the UK and 372 billion pounds of imports into the UK. You will note the balance of payment difference there of some 72 billion, as we import much more than we export with the EU. And of course, a lot of that import volume is imports of parts and materials that we process into finished goods and later become, then later go back into the export pile again in the form of finished goods that we sell to the EU and to other markets. So our trade teams still have a huge amount of work to do in respect of export continuity agreement exports of 40 billion and 300 billion with the EU. I think that 340 puts the 125 already done into context. So huge amount of work that needs to happen in order that we can carry on trading as we do today, where we have many businesses using preference tariff arrangements and therefore having duty-free goods moving without the payment of duty, zero-rated duty into those markets. Thinking about the countries that are involved, I'm not going to dwell too much on this slide, but these are the rollover partnership agreements, association agreements, and other trade deals. Important to stress that they are not all free trade agreements in the fullest sense. Some of them apply only to trade and not services. Some apply to both, and some are simply partnership and association agreements. I draw your attention to Japan. It's in alphabetical order, so easy to find. That's the most recent trade deal done. It is, the PR says that it's historic and it's significant, and it kind of is. Of course, a really important trade deal for the UK to have reached with Japan, and it does go further in certain matters of trade than the deal with the EU. But we should note that the EU has already reached their agreement with Japan. So at the beginning of this post-Brexit vote period, Japan didn't have a deal with the EU. It now has a deal with the EU, so it becomes a continuity agreement. Beyond that, those yet to be done and the likelihood of them being done, there's some crossover here. There are those that would come into the EU rollover pile because the EU has a deal with them. There are those within that pile, like Mexico, Singapore, and Vietnam, that also come into the pile of countries that we want to reach agreement on through the comprehensive and progressive trade, comprehensive and progressive Trans-Pacific Partnership. It's not an easy one, that is it? But that's 11 countries that include 3 that I would suggest are unlikely to be agreements that we will reach before the end of this year. The reason we're unlikely to reach them is that I think Mexico, Singapore particularly, are not prepared to make a move until we have a deal done with the EU. Vietnam are similarly kind of waiting to see. Big challenge with Mexico is on rules of origin and accumulation, and that's why they want to see what happens there. We've also got Canada in that a list that I think is likely to be done by the year end. There seems to be a great deal of energy from the Canadian side as well as from the UK side to get a deal done, and we're at the advanced stages of those agreements, the agreement between the two countries being reached. Similar, Cote d'Ivoire is just about over the line. Egypt, I believe, is down to tariff rate quotas on specific items. In fact, one specific item I have heard once that is done. So North Macedonia, Turkey, the caveat in Turkey being done is if we don't reach an agreement with the EU, we will have a trade-only deal with Turkey, which is almost, I'll dare say, I shouldn't use the oven-ready phrase, but nonetheless, it is just about there, I believe, I'm told. And so if we don't do a deal with EU, we will have a trade-only deal with Turkey that will provide continuity in sectors such as automotive and others. Ukraine, for geopolitical reasons, will be, I think, highly likely to be done. So that's my measure in terms of those that will be done, those that won't be done. You'll note that 4 countries already are in that green shaded pile: Canada, Chile, Japan, and Peru, that are part of CPTPP. Australia, there's good mood music on Australia. I think I could be wrong about Australia being in the amber. Maybe it should be moving towards the green zone. The Commonwealth countries such as Australia, New Zealand, and Canada are keen to get a deal done. My question is whether that can be done and agreed and go through Parliament in time to be signed off before the end of this year. So, and then there's the bilateral. US, you know, the election in the US is the thing that will stop that happening. And the complication with Australia, New Zealand on matters probably more to do with data and people rather than goods, is the thing that will hold it up, and time will, I think, will hold it up. But be cognizant of the fact that if you're already benefiting from preferences in some of those amber and red countries on the left-hand side, the EU rollover, and you're reliant on those free trade agreements, that the imposition of duty, even for a short period, would have the effect of narrowing margin and competitiveness. So if you are trading with those countries, you really ought to be thinking of those kinds of matters that I'll come on to in the next slide. So moving on to readiness, I call this the basics. It's a list of 10 things that I suggest if you haven't done them so far, as of today, you make a plan to get these questions answered. Basic one: what's my EORI number? Everyone in this call ought to know what their EORI number is, and if you don't specifically know it for your business, then find out who has it, probably the finance team, and write it down. You're going to need it. You've got a decision to make. Will I use staged or full EU import controls? Because there is a 6-month period from January until June next year when you can opt to use simplified declarations and entry in your own records to deal with imports from the EU that enables you also to defer the payment of duty and VAT. So you need to make a decision as to whether you use stage controls or you simply move straight to full declarations with the EU. And the reason you might do that is because you're already making full declarations for the rest of the world, and it keeps you within one system. You might want to ask, how do I set up postponed VAT accounting if you don't already have it? So this is a system we campaign for in the British Chambers in order that VAT due to be paid on imported goods could be paid in your VAT return rather than at the point of the goods arriving into the UK. And so that will apply from the 1st of January. Guidance on gov.uk already exists on how to set up that system and how to operate postponed VAT accounting. Do I need a duty deferment account? Well, if you don't pay duty on your goods, you probably don't need one. But if you do pay duty on any goods that come into the UK or will be subject to goods paying duty on goods that you import into the UK, you will be able to get a duty deferment account without the need for a customs guarantee. A customs guarantee is where you either provide an insurance bond or a bank bond secured against future customs debt. These will be available from the 31st of October, I hear, will be available on the HMRC website. The process, I'm told, is fairly basic for the application. As long as you're a business of good standing and financially sound, then you will be awarded a £10,000 per month duty deferment account. If you already have a duty deferment account for £10,000 or less, you will be able to automatically be given a duty deferment account for £10,000 and to free yourself up from the insurance bond or the cash bond that you have with your bank. That's helpful for cash flow. We should welcome it. But be warned, the 31st of October to the end of December is a short period of time. And that means that there are going to be a huge number of applications being submitted for a duty deferment account. So get ahead of the queue, get that in now. You need to work out how many customs declarations you're going to need, because you need to find a supplier who can meet that need. You need to, you probably want to, if you're doing a high volume, say 2,000 declarations per annum or more, you may want to think about doing them yourself and creating the ability in your company to make your own declarations. And that would involve also getting the right kind of software and connections with the ports of entry and exit that you would be using. You also need to understand your responsibilities and what records you need to keep, what commodity codes apply to your goods, what the customs valuation is for your goods, that's different from invoice, and what are the rules for the borders that I'm going to trade across. Those are I call that the basic. The detail is what do you trade, where do you trade, and that's in detail. What do you trade and what are the commodity codes? Where do you trade, borders and markets and duty and tariffs that would apply? What's going to change for your business come the end of this year? What are my sales and supply contract terms? So what's the basis of selling your goods? Do you sell X works? Do you deliver free carrier on board, duty paid? What are the terms under which you trade? And look at whether you need to change them for your EU customers. And that will really have a big impact. Will you pay duty on imports? And what kind of goods are you moving? Are they standard goods? Are they control goods? And there is a control goods list on the government website, but that would include everything that's plant life or food and foodstuffs, as well as nuclear proliferation parts. But there's some fairly basic goods in there. Or are they excise goods like wine, spirits, chemicals and the like that may be subject to excise? So a lot of questions you need to ask your business right now in terms of your preparations. Still a lot could go wrong. We hear a lot of talk, you're going to hear a lot more talk about compliance in the UK and in the EU. Both sides of our border will expect to impose their own controls. And while the UK is going to stage controls on imports for EU goods for 6 months, the French side, the Rotterdam isn't, the other side of the channel are not giving a stage control. What could go wrong is that hauliers don't have the correct paperwork. So you have a responsibility to make sure they have everything they need to be able to get through the port. And of course, if it's a consolidated load, it may not be your paperwork that holds the truck up. It could be someone else's. So that's something else. I don't mean to be a doom meister here, but these are the things that have the right information in place. What if trucks can't get to the port to uplift or drop goods because we've got blockaded motorways? The Kent County particularly are talking about the risks around that. We've got new systems coming from HMG and HMRC. We need them delivered in time. And importantly, the most important thing to avoid something going wrong is making sure that as a trader, you don't fail to prepare. So I'm going to go on now, before the next slide actually, we're going to have another poll. Just snap poll again, basic question, and this next poll is going to flash up on your screen right now. So how are you planning to process customs declarations for EU trade? So you may already be trading with the rest of the world. What you can do for EU? You may not be making customs declarations at all. So what are you going to be doing in the future? Will you be doing it yourself? Are you going to use your current freight forwarder or a customs agent? You're going to appoint a new freight forwarder or a customs agent? Have you yet to decide? Or do you not need customs declarations? There's a lot of people on the call today. We've got, I think I'm right in saying just about 400 people 497 actually have joined the call, so it does take a moment to just churn through the responses, but my colleague will post the result just about now. So more than half using your current freight forwarder. 12% will be doing it yourselves. That's great. That's good to hear. We need lots of people to do this for themselves. 14% undecided. 6% are going to appoint a new freight forwarder customs agent, and 14% of the call don't need to use customs declarations. Well, thank you for that. That's fairly typical, although since the last time we did that poll, I think we've seen a slight increase in the number who are now thinking that they might need to have more than their existing freight forwarder or customs agent. Thank you. So what is the problem? Well, this is the problem. We've got 180,000 EU-only traders in the UK, 68,000 trade with just the rest of the world, and 73,000 do both. And the preparedness of those people stretches from mostly unprepared to mostly prepared, and that's been reflected in the poll we did at the top of the session. So you will need customs declarations if you import or export goods to or from outside the UK after the 31st of December. The scale of the issue is this. We've got around 15,000 customs agents right now. We think that the customs grant scheme the HMRC has put in place is going to have an effect of around about 750 additional customs agents before the year end. But that leaves a gap of 20,000, we would say, customs agents. Michael Gove, in response to the Road Haulage Association, estimated 50,000 new recruits, customs agents would need to be recruited in the next 6 months. That was back in February. We think it's actually more like 35,000 in total, and therefore an additional 20,000 agents. But we've only got about 750 being recruited right now, and we need 220 million additional declarations to be made. No matter the deal with we do with the EU, that doesn't change anything. These declarations will have to happen, and so that's why I say work out how many declarations you need to be made, and don't presume that your existing agent or forwarder can deal with the additional work. Make sure you've clarified with them and they've made a commitment to do so. So 150,000 more traders are going to need a customs agent or a service for 220 million, and only hundreds of agents have been trained. We at Chamber Customs can make customs declarations for your business. If you need customs declarations, you need to know that they are complicated. They do require specialist knowledge. They need special software linked to HMRC and to each port inventory system that you would use. It is a fiscal document, so it has to be done properly to ensure that you are going to pay the right amount of VAT and customs duty, and not only to not underplay your VAT and customs, but actually to avoid overpaying tax and duty, and also in order that you've kept accurate records. How we can help, just to move on to a little bit of a commercial break, if you don't mind, is how we can help is through Chamber Customs. We've created a customs advisory service that also trains people. We will train your people to do this work. But if you don't want to train your own people to do the work, then we can make customs declarations for you. We've been investing in planning this business over the last 2 years. And so that we now have the opportunity to help you to secure customs capacity right now. We are active across the UK, but like any intermediary business, our capacity is limited by the people we have. And therefore, it's only we can now guarantee that your declarations will be made accurately and on time if you secure some of our capacity. So what does that look like? We've got 200 customs agents that will be ready by the end of the year. There's 140 ready right now. We're training another 60. They're highly trained. They go through an intensive 13-week training program to ensure that they know what they're doing before they're approved to go onto our system in a live environment. We're operating in 45 UK locations, so we're near you, and we're in every nation and pretty much every region. Our systems are HMRC approved, so we're trusted. You can trust us. Because we link directly with every UK inventory link port, we're adaptable. So if goods intended to come into Gatwick change flight and come into Heathrow, we can clear the goods just the same. Likewise, if it's Dover and Folkestone, or Folkestone and Southampton, we can clear the goods at every port. And we're adding 500,000 capacity declarations from the 1st of January. So if we commit to do the work for you, we know we'll deliver. We'll make that commitment and you'll have bought into that capacity. And importantly, we'll provide you with line-by-line invoicing so that there's absolute clarity on pricing when you get the invoice. So we're offering a compliance-led service that will offer you peace of mind. I'm not going to talk to this slide. It's in the slide pack for you to peruse and look at, but if you want to avail yourself of the Chamber Customs Services, then find out the answer to that little grid of questions on the right. Send us that information and we'll get back to you very quickly to find you the capacity that you need to avail yourself and to also supply you with a copy of our terms and conditions. Finally, I've created a small glossary because there are lots of acronyms in this world. That glossary is there in the pack for you as an explainer for you. So with 15 minutes or so remaining, we're going to go to a Q&A now, but thank you for your time and for your attention.
Thank you very much, Liam. That was a really interesting presentation. I hope everybody else has found that useful. As Liam says, we're going to go into a few questions now. Thank you very much, everybody that sent some questions in. Some good ones here. Let me just say, so there's a slightly technical one here from Lee, Liam. Will GMR replace NCTS, or will this be an additional requirement?
No, it's an absolute prime example of acronyms being used here. So it's a goods movement reference, I think, is what Lee is referring to, an NCTS. No, one doesn't replace the other. The goods movement reference is the umbrella reference number for the truck or the trailer that brings together all of the safety and security declarations, the import declarations, any other materials that would be required to move those goods today. Those entries still have to be made.
Thank you. Becky Smith is asking, is there a place that we can access which countries have continuity agreements in place?
Yeah, there is actually. The information I've provided for you comes directly from the government's website. I'm afraid they don't make it easy for you, so you have to look at each individual agreement and its status. What I've tried to helpfully do is to bring together all of those continuity agreements as they stand, as they stood yesterday, and to put them in one place. And so. You know, I hope that's helpful for you to do that, but bear in mind that's a dynamic situation and that's just as they stood yesterday. That could all change, or could change a bit tomorrow and the next day. I will continue to update it, and if you come back to 75 days to go next month, then I'll give you an updated position on those trade agreements.
Thanks, Liam. Severine is asking, when will we know details of countries that we can use preferential statements on our invoices for and use ER1s and ATRs? Will our current exporter status change automatically?
Yes, our exporter status does change, obviously, you know, because it changes in the following way. You still will be able to use preference certificates, EUR1s, after the end of December for those countries where the trade agreement allows for preference tariffs. And again, that's a fairly definitive list. You would need to go into specific trade agreements for countries that you trade in to check the detail, because as I said, there are some that are partnership agreements, some are association agreements, and some are full trade agreements. So you need to look at those specifically, but in principle, where we have preference arrangements in place, a UK EUR1 will be able to be issued by your Chamber of Commerce or as an invoice declaration if that's allowable in the case of the country you're entering. For ATRs will definitely be gone by that's an EU mechanism for movements into Turkey. It would be a UK EUR1 that you would use for Turkey should we reach a trade agreement with Turkey, you know, whether we have a deal or no deal with the EU.
Thanks, Liam. At least two people have asked an interesting question here, right? Is that are we likely to have a trade agreement with China?
I think there's, I could safely put a bet on it, William Hills, if I was a betting man, and say no. There's about zero chance of that anytime soon. There's always lots of talk about trade agreements between China and other countries. You know, US-China negotiations landed in a very bad place, didn't it? Because you know, the US started putting you know, tariffs. They started putting tariffs on each other. So I don't think that's anywhere on the aspiration list right now for UK government. So I think there's no. I would say no.
Thanks, Liam. Yeah, that would be my my guess too. Somebody's asking if we applied for a deferment account with customs guarantee back at the time of a potential no-deal Brexit, would it be valid, or would we need to reapply in October?
No, it would be valid. In fact, HMRC asked them this question, and what they've said is basically your guarantee-based deferment account would roll over to be one not requiring a guarantee, and then you could discharge the guarantee. So what it does mean, though, is that you would have to apply for the customs comprehensive guarantee first, and then the duty deferment account once that guarantee was in place, which would probably take you between now and longer than the end of October. So my advice would be don't waste your time. But you can do it if you already have a guarantee in place. That's fine. Apply for a duty deferment account. And it typically, I think, will take about 50 days for that process, 50 to 60 days typically for a duty deferment account at the moment, is my understanding. But yeah, you can do both, but one will supersede the other. Similarly, if you have AEOC, you'll automatically be given a 10,000 per month duty deferment account if you don't have one right now, and those will be issued automatically. And if you operate SEVA at present, then SEVA accounting is another way of paying and accounting for duty. Then again, your registration, your authorization will then be flipped over to a duty deferment account at £10,000 per month automatically on the 31st of October or very soon after for those of AEOC and SEVA. Yeah.
Thank you, Liam. And I'm pleased to see that the questions are coming in thick and fast. Here's another one for you. What is a safety and security declaration?
Well, I mean, to be honest, it's much more comprehensively answered on gov.uk, frankly, because I would need to give you a fairly comprehensive answer. So I'd encourage you to go to gov.uk, type in safety and security declaration, and it'll give you a full explanation there. But simply, it's a way of border control organisations like you know, Borders Agency and HMRC checking on goods that require those declarations because they require them. They're either control goods or they're subject to some other kind of control, whether it's sanitary, phytosanitary, control goods because it's weapons, arms, and there's a range of reasons. There's no simple answer to that other than I'd advise you go and look it up. I don't mean to be flippant, but that's the best and most comprehensive answer you will get.
Thank you, Liam. No, that's often the case. Emma is asking, I heard that if free delivered terms instead of X works, then the importer has the responsibility for arranging VAT returns and declarations. But if it's X works, then the exporter arranges this. Is this true? Well,
a lot of people sell X works on the basis that some don't even believe they're the exporter because they sold at the factory gate to typically a trader in the EU. We are all part of the single market, so it really didn't matter. The goods were within the customs territory. They're sold at the factory gate. They moved from the factory gate to wherever else in Europe and there's no VAT to be accounted for, no duty to pay. Of course, once we are no longer in the European Union, then that kind of doesn't work for the importing party in the EU. Your customer in the EU is not going to be too content with buying Ex Works, because they would then be responsible for making an export declaration, making an import declaration, and accounting for the duty, which may increase the cost of the goods that you're selling. So my advice always with these kinds of questions is, if you haven't already entered discussions with your buyer, the buyer of your goods, then or the seller of goods to you, then you ought to have try and have a pragmatic and grown-up conversation about the new arrangements, because it matters to both sides, I'm sure, that you find a solution. But the issue then is one of Incoterms. There are a number of Incoterms that could be applied that would split the responsibility. So perhaps as the seller of the goods, you make the export declaration, and the buyer of the goods makes the import declaration. And the reason why it would be good for the buyer of the goods in Europe, for example, to make the import declaration is because whilst they may be subject to duty and payment of VAT, the buyer of the goods will be able to reclaim that VAT through selling the goods or reclaiming the VAT as they put the goods into processing or whatever. Or they may put them into a customs warehouse or use a variety of authorizations for accounting to account for VAT and duty. As an exporter, I would also suggest, and it doesn't work for everyone, but if I was selling the goods to another party, I would much prefer to know that the goods had left the UK and had disposed of their customs responsibilities by doing the export declaration myself. So being responsible for the export declaration means you're not going to sell Ex Works, but you are going to have the evidence that the goods left the country and are not therefore subject to VAT that you would charge if you sold the goods in the UK. And it can often get people in trouble when HMRC come and do an audit and an inspection, and they find that you don't have evidence of export for goods, and therefore the only assumption they can make is you sold them in the UK, you charge VAT on them, and you're due that back to HMRC, and so they fine you and they impose that VAT. So Ex Works sounds like the easy option, but it may not be the best option. Check Incoterms.
Thanks, Liam. Yeah. Another good question here from Chris Shepherd. Are IPR and OPR still available post the transition period?
Yes, absolutely. Those arrangements will still be in place for traders in the UK. Sending goods for processing relief, for processing, or bringing goods in for processing and to gain those reliefs. The same as customs warehousing, all of that remains and applies, and very good that it does too.
Thanks. And Scylla is asking, can you advise regarding the current triangulated shipments that travel from our supplier in the EU to our customer elsewhere in the EU, but are sold to us in the UK? How should we deal with this regarding customs declarations? Well,
if the goods never land in the UK, so they don't actually land in the UK, then there is the customs declarations would be between your supplier and your customer if they were in other countries. I'm assuming triangulation, you're implying that. If the goods were going to land in the UK because your customer is in the UK, then that's a decision about whether the customer or your customer is responsible for the import declaration, or whether you decide to go between the supplier and the customer and to handle that part on behalf of your customer as the importer. These are exact classic supply chain kinds of questions that my kind of 10 detailed questions and then kind of 10 basic and half dozen detailed questions seek to flesh out actually. And of course, what I'm saying to you is you need to flesh them out. Of course, the result of that is you need to get answers for them, because some of them will be complex, result in complex questions that may indeed point you in the direction of some advisory services, either from your firm of accountants and the Big Four, for example, have got lots of advisors that can do this work, or to organisations like Chamber Customs, who also offer advisory services for the detailed and very specific answers to the questions that apply to your business. And of course, if we're providing advisory services, we have the indemnity in place to be able to give that advice fully, rather than just to be having a chat as we are here on a Q&A. You ought not to take any of this as advice, please, folks. Check it up and get the detail. I can give general answers, but I can't, obviously get into the specifics for companies.
Yeah, thanks, Liam. Roseanne is asking, does the Chamber have a table where they keep all of the country's export paperwork requirements?
No, we don't. But there is the government is creating an equivalent to the market access database currently available in the EU. There will be a UK market access database. It's already live to a degree. Of course, it's incomplete because, well, it has all of the WTO tariffs for those countries embedded in it right now, and those tariffs would apply if we didn't have a trade agreement. So that's available in gov.uk right now, so that you can, again, specific to your business, look at the countries you trade with and look at the trading arrangements that would apply under WTO rules, but also be looking at those rollover agreements and continuity agreements already in place and what that would mean. I don't suggest this is an easy task. It isn't an easy task, but it's one that you need to do because margins depend on it.
Thanks, Liam. Bruce Geddes is asking, every declaration will cost a fee. What is the best way to minimise or even eliminate this fee?
Eliminating the fee is difficult because it creates toil to do it. So you're either going to have the cost of employing your own people to make that work happen, or to contract another agent to broker intermediary to do that work for you. Either way, people need to be paid, but also there are transactional fees along the way as well. So in a simple export declaration, typically standard goods will be a modest fee, somewhere around 25 to, well, frankly, £150 I've heard quoted recently, but Chamber Customs would be £25. An import declaration, £55. It's much more complex, takes more than double the time to do typically, and requires a lot more transactional connections with ports and the like. On top of those import fees, you will also have fees imposed at the border by some of the authorities will impose fees where they want to make inspections, but the ports will also impose fees for sometimes security charges, moving the goods from one point in the port to another for inspection, and a range of other charges that can't be known until the goods arrive typically. And so there's really no way to avoid those fees. The government, National Audit Office estimate that the cost to traders in the UK is some £7 billion recurring on this work alone. So this is a big impact on the cost of trading that ultimately doesn't it land with the consumer. Those costs do tend to land there. So the transaction costs are not avoidable, I'm afraid. Even doing it yourself will cost you time.
Thank you very much, Liam. Ladies and gentlemen, I'm afraid time has caught up with us. There were lots of very good questions coming in. Some of them are very technical, some of them quite industry specific. Apologies to those of you who we didn't get a chance to get round to your questions. I'd like to thank Liam for his excellent presentation, those behind the scenes of the BCC that help support with the techie side, and of course, ladies and gentlemen, to you all for joining this wonderful presentation. Thank you very much indeed.
Yes, thanks everyone. Hope to see you again sometime. Thank you. Thanks, Sean.